I joined NRI just over a year ago, but prior to that, so if you could go to the next slide. Just prior to that, though, I spent a long career with Marsh. When I first joined with NRI, one of the first meetings I attended was a conference of pools within Southeast Asia. That meeting took place in China, and at that meeting a number of representatives from the Indian insurance company GIC Re, the state reinsurance company, were present, and we started talking to them about the nuclear liability situation in India. And everyone that was around me and everyone that was talking with them was telling them that it couldn't be done for the reasons that Omar has already alluded to. Being perhaps a bit naive and also being new to the business, I felt it was my responsibility to question why that was the case. And so over the course of several months, I started to sort of ask people and question why that was the case. And I got to lots of the conclusions that Omar has already outlined. And I'll talk a little bit about that as I go through my presentation as well. But I guess, as Ron has said, you know, what I'm here to do and what Mark 1 is here to do is to sort of perhaps offer a glimmer of hope. But by no means am I wanting to sort of say to you here that the legal and political issues are not things that are difficult to get across. And it would be far easier, I think, if the Indian government were to make the changes so that they fell in line with the other countries around the world. But if we start to sort of look at it and think about how we move forward, we started talking to Marsh in February of this year, who were talking at a very high level to GIC Re. And as the Consul General outlined in his opening remarks, the Indian insurance companies have formed a domestic nuclear pool. That pool has not yet written any business, but at least they have achieved the first step, which I think they should be congratulated on. They have formed a pool, and that has been with Marsh's help and with NRI's help. The next stage is the more complicated one in terms of can they actually start issuing policies, and would those policies be compliant? If I can just start by giving a bit of an introduction to nuclear risk insurers. Unlike NIAC, NRI is an international pool, so we write business all over the world, and that's one of the reasons that we are involved in the discussions on India. We started our formation in 1956, and Colleen sort of spoke a little bit about the need by governments and the industry at that time to have an insurance solution. It took quite a lot of time, I think, in trying to sort of get to that solution. And again, I think you can draw parallels with what is happening in India. It's only relatively, sort of a short period of time since India have been trying to find a solution. It's very easy for us in more established countries of the world to sort of say to them, you're not doing it right. But I'm sure my own country and my predecessors would have had challenges as they were forming NRI. One of the first challenges was that the insurance market didn't want to write nuclear risk, but the governments and operators were keen to have some form of solution. And so what essentially happened, and I'm not sure which happened first, whether it was the change in the insurance covers or whether it was the formation of the pools, but what happened was that the insurance market said, if you really, really want us to cover these risks, then we want to avoid the potential for claims being made elsewhere, and therefore we want to exclude nuclear risks from every other form of insurance policy. So if you look in your household contents policy, or if you look in your motor policy, you'll see that there is an exclusion of nuclear liability. There's also one in all of the general insurances that your companies buy. So that means that we know that we only pay the loss once. And coming back to Omar's point about, and Colleen's point about the channeling of liability, because we're insuring the operator, we know that we're only going to have to pay that claim once, and we're not going to have lots of other claimants coming through to our members through other sources. So that's how we established, and then we've gone through a number of changes over the years. I guess most recently in 2003 we became a limited company, and we are actually responsible for our members' capacity. So much like Colleen's company, we aggregate insurance capacity on a net basis. So that exclusion I was talking about just now, in order for insurance companies to even write nuclear risks, they provide their capacity on a net basis. It's essentially the amount of money that they can afford to lose if a claim were made. And we build that capacity up. So you'll see here that we started with just under £26 million back in 1956, and we had over 200 members of the startup company. Today we have £500 million of capacity and 25 members. So we've consolidated into a group of members who really do understand the nuclear risk. If we can go to the next slide. So that £500 million, which come January of next year will increase to £600 million, is dealt with in the following way. So we can use all of that capacity for property damage risks, and we can use half of that capacity for third-party liability, nuclear liability risks. So of course, if we're asked to write both, the maximum we can write is the £500 million. As I say, the security of insurance within the nuclear world is paramount. The operators and governments don't want to find a situation where an incident occurs, a major release of radiation takes place, and then we as insurers are called upon to do our bit to pay the compensation that arises. As Colleen has said, in the next few years you will have $1 billion Canadian of liability risk. You and the operators and the government and every individual in this country needs to know that we can pay. So that security is paramount to us. Our minimum solvency is AM Best A, and all of our members have to adhere to that minimum solvency requirement. If we can go to the next slide. So I've already started to describe why pools exist, but they're not just pools in the nuclear world, there are pools in other industries as well. But the mechanics for why you would establish a pool are already summarised in those 4 bullets. So it's where risks are few in number, so where we have a small number of potential clients, and the nuclear industry is a good example of that. It's a finite industry. Where the capacity that's required is beyond the means of the individual companies that can provide it. So as I say, my members can't buy reinsurance, and therefore their capacity is limited, and the only way that they can actually get to a critical mass is to join it together and form it under a pool like us. And it's also where there are hazardous risks. So you often see pools around the world for terrorism, for catastrophe risks, and of course nuclear risks as well. So those are really the reasons why nuclear pools exist, and they exist in all of the major countries of the world where there is a nuclear industry. And they are forming still today. So if you look at the UAE in the Middle East, they are in the process of building a new nuclear plant working with the South Koreans. And when that plant is commercially commissioned, they will have to have a mechanism in place to access insurance and access the wider international insurance market. So they are forming a pool. And similarly, as we've already discussed, the Indians have started that process as well by forming their pool. So these things are still relevant. When it comes to how do we provide the capacity to the businesses, if you look at an example here in Canada, Bruce Power, of course, needs more than £500 million of capacity. So the way that we generate that capacity is that we reciprocate business with the other pools around the world. So they are all operating on the same basis as us. They all have net capacity, so it's safe for us to offer them support to us as reinsurers. So that's how we get to the large limits that companies around the world require. I'd estimate, and I'm not sure we'd be able to use all of this capacity on a particular risk, because there are always issues in particular countries as to why that capacity might not be freely available, but there's probably in the region of about $3.5 billion of capacity today. So just again looking at Canada, if you're looking at something like a Bruce Power with all their property assets, and then you're also looking at a liability requirement as well with the new liability law, then there is the capacity available within the international market to deal with that. Next slide, please. Sorry, can you just flick through this? I didn't realise I'd got sort of build up. That's perfect, thank you. So I don't think it needs me to spend much time on this, but I think you're all understanding of what the risk is. So it's that risk of the catastrophic event and that leading to extensive damage, but also nuclear release. So that's the thing that we as insurers are looking to protect. And again, just as we would be doing that for ourselves, you would also see the Indian insurance pool looking to do the same thing there. And then the problems for us as insurers, I've already alluded to a number of these, but there's high severity and low probability of these events taking place. So you know that is a challenge in terms of how do you price a risk like this. There's also, as I mentioned earlier, the finite number of clients in the world that will buy this insurance. So we represent a very tiny proportion of the global insurance market. And then insufficient data. Thankfully, the industry has a very good record of safety. There aren't lots of nuclear incidents around the world, and therefore it's actually quite difficult to model these risks. So we spend a lot of time looking at how do you model that risk, how do you model that exposure. Next slide, please. So similarly to the way that Colleen addressed some of this, I just wanted to sort of go through some of the main key issues as we see it in order for nuclear insurance to be freely available. So the one thing is the requirement within the conventions for that financial security. So it either has to be provided through other financial means, or it has to be provided by insurance. That's a requirement of the conventions. And as Colleen has already alluded to, we have the channeling of liability. And as Jacques has mentioned as well, there's that sort of safeguard for you as suppliers, that the operator can't in turn look to recover that loss from you as suppliers. And then there's the strict liability. So again, it's one and the same with the channeling of liability. The operator, up until now, has been the person that carries the responsibility, irrespective of whether a supplier has been negligent or not. Next slide, please. We've heard about the 10 and the 30 years a couple of times. In the new conventions, in the changes to the conventions, the requirement for the prescription period goes from 10 to 30 years. We as insurers are not yet willing to provide that length of time for a number of reasons. But we are prepared to continue to provide the 10 years that we have so far provided. So one of the complications we do have with the Indian setup is the requirement there for a 20-year insurance policy. That's something that we as NRI, when we were talking to Marsh and GIC Re, were not prepared to waver on. As we've reached agreement all over the world for the 10 years, then we couldn't suddenly change our stance in India. But as you've just heard from Omar, it's not that simple. The risk is potentially much longer than just those 10 years. And then you've heard from Colleen already in terms of the liability limited in terms of amount. So with the formation of the Indian pool, they have established $250 million of capacity. So they've made a start, but of course, arguably, they need to do more. And then within the conventions and within our policy wordings, there has to be very clear definitions of damage. And what we do is we mirror what the conventions state. So as far as possible, our policies are back to back with the conventions and also with the national laws that are put in place. And as we've already heard, the jurisdiction has to be in the country where the incident has taken place. So there's control again over how that incident is managed within the country that has suffered the loss. So on my final slide, I think these are just really the things I'd like to sort of leave you with, and I think they've already been stated previously, but the principles that are held within the conventions, that are mirrored within the national laws and also within the CSC, are all worth trying to stick to, because if we can stick to those, then it makes our life as providing insurance a lot simpler, and it makes your life as suppliers a lot easier in terms of the contracts that you sign with companies. National legislation, as I've said, is there to mirror what is put in place within the conventions. The insurance policy must follow the relevant national law. So that's again something that we spend a lot of time on, making sure that we're following what is stated in that law. And general insurance policies, as I've mentioned, do not provide cover for radioactive contamination. So there's that exclusion in everything, so that we have the cover in one place. Now, before I sort of finish, Ron, and before Mark sort of tells you more about what we did in India, I do think that we as insurers, working with the operators and suppliers, many of whom are our clients, we do have a duty to try and get to a solution. As I say, I would love the law to be perfect, and if it is perfect, that makes our life a lot easier. But in the meantime, I think we owe it to you, we owe it to everyone else to try and work to a solution. So I think, Mark, you're going to talk a bit about how we tried to solve the problem earlier this year, and Mark and I won't stop talking about it in the meantime, and we see where we go from here. Thank you very much.